What's up, guys? I just wanted to hop in really quickly as I get back to the office and share with you guys this trade that I took on Tesla. I called it out live on X. If you guys want to follow these trades in real time, make sure you're following me over there. And I posted 5 hours ago that Tesla was setting up on the 15-minute chart to perfection. And a lot of people commented on that saying, man, I really wish that I could read this. And I like those types of comments because there's a lot of times, I've been doing this for nearly a decade, so I forget that what might seem pretty basic to me is really not that basic or said a lot within the trading community to where a lot of people might not even understand some of the stuff that I post. So let's go over the trade, and I want to take out my iPad and really kind of be able to draw all over this chart. I really like to have very simple, very clean charts when it comes to technical analysis, especially when I'm posting, because I feel that one, most indicators are just worthless. And two, that the harder that you make this on yourself, the harder the adherence is. And the adherence is everything, which means how well can you stick to this? You can see just even looking at most charts, like you could play, accumulate shares down around, a specific level, selling them at a specific level, buying on a 22, selling on a 22. Like, it's not hard to find a winning strategy, but what is hard is to find a strategy that you can adhere to day in and day out, whether the market's up or whether the market's going down. And so let's start just by isolating and looking at this actual position. So I want you to pretend that everything here highlighted is not currently there, because when we posted it earlier, it was before noon and we were watching right around this level. So I ended up entering, we saw this big breakout this morning here, and then I ended up entering right around here on this retracement. So normally if we see a stock pop up, you can see that structure here was broken. This is going to be a small order block right around here. They have this drawn out there, but for me, I would really be watching this level to see how we were respecting that, which we were not doing well, and then we ended up selling off. Now at this point, I was looking to start getting into contracts around here and then doing my final averaging down at the 22 SMA. A lot of people will ask me, they'll say like, hey, if you expected that Tesla could drop down to that 22 SMA, which is that blue line, then why did you even start to accumulate shares up around, or to accumulate calls up around $192? And the reason for that is that when it comes to making your trading consistent, and we're talking about very, very consistent, not, okay, we get a couple of good setups a month, like to the where you can treat this like a business. You need to be able to have very consistent and reliable setups, which means that I can't just buy every day at the absolute best price. I actually, if I want to treat this like a business and actually have consistent income, I need to know that I'm not waiting for the absolute best price. If you're somebody who's new to trading and you have a smaller amount of capital, yeah, use the patience and wait for the best price. But I know that price levels are just that. They're just levels. They're not a super pinpoint specific tool that it's definitely going to come down and touch and then bounce. So I'm using this as generalities, right? And I don't even know if that's a word, but as we're pulling back, I realize and think to myself, if I start here with in total about 50% of my planned position, I can therefore average down here with the other 50% of my planned position, which means that I will have an average somewhere within this range, which, for me, and when we get into this setup, you're going to notice that's more than enough room. That's more than enough that I need in order to make a sizable, healthy return from this trade without over leveraging myself. Now, let's go through and look at what happens from this point. We end up getting a bounce off of the 22, and we see this nice push back up into this resistance level of about 193.57 or $194. We see that this order block now actually forms, and there is a chance that we could actually see a retracement back into the block before pushing our way back up. Now, the big thing that I want you to understand here is that these order blocks are not some live indicator that's showing money actually coming into the stock. What all it's doing is showing you when structure breaks, showing you this drop that's happening, and then the very last candle here on that impulse. This candle, if you were to draw from highs to low, that now becomes your order block. And the reason that we usually retrace into a block is just because all of the buyers that are trying to come in here, they're the ones who actually have the money to push this up into that $200 level. Because you have to remember, we cannot move the market. So the only people who can actually move the market is other hedge funds and other institutions. And they are not just going to hit the market order anywhere around here. They're going to wait for the retracement back down into their zone. Now, in this instance, it hasn't happened yet. There's a chance that it could still happen, going into the rest of the week. But what I'm expecting is a continued push up to about $200. And then I do think from there we'll probably end up seeing a retracement and a rejection. So what is that going to look like? Obviously, we're not saying that this is definitely going to happen, but this is how it would end up setting itself up. We're going to go through and take a screenshot so that we can draw here. And I want you to notice this break of structure that happened back here. This is a break of structure because we had a support where we bounced 1, 2, 3, 4. Once that support level was taken out, we now know that we're probably going to continue to sell off in this downward direction. But we know that a stock doesn't just crater the same way that in most cases, unless it's NVIDIA, it doesn't just directly go up all of the time. So as we see this come back down, we do notice something happening here. We're creating another level of structure where we had bounced 1, 2, 3 times before breaking again. So this is showing that there's another chance that we're probably going to continue our way down. But as we said before, the market never moves perfectly. And a lot of times what we want to see, or what we will usually see, is this push back up to whatever moving average you guys usually like. I use an 11 and a 22. The other thing to notice here, though, is that we have a $200 level right here, which was a very strong resistance level before and a very strong support level before. So what I think is going to happen here is I'm assuming that we will probably see Tesla either push up into, which my target level for this trade was $200, or max push up over $205 up to that level. But I think we're probably going to come up to 200, maybe 202, 203, and from there I am expecting a rejection and another lower low. So I'm playing Tesla long up to 200, and then I will be playing short down to 175. I hope this helps, guys. If you want access to all my trades, check out the second link in the description. You can also get access to all of my trading bots. So if you guys are focused more on consistency and profitability and just making not passive income, that's complete bullshit. I'll be honest with that. I hate when people say that. But if you want some consistency to your trading and you want to learn how to stick to a very simple system and adhere to it well, check out the second link in the description to join our Discord. See you guys next time. Peace.